All right, today we're diving deep into Unicommerce. They're a huge player in the e-commerce software world, and they just dropped some seriously eye-popping numbers in their latest earnings call. So, we're going to break down exactly what's going on behind the scenes of this e-commerce engine.
Okay, let's just start with this number right here, 75.3%. That is the massive year-over-year revenue growth Unicommerce just reported. I mean, in a market this tough, a number like that really makes you stop and pay attention, right? So what is the story here?
But that huge number, it's really just the tip of the iceberg. What we're going to do is break down the actual strategic moves that are driving all this growth. And, just as importantly, we're going to look at some of the tough questions analysts are asking, about the risks that might be hiding just beneath the surface.
So here's how we'll tackle this. First, we'll cover their stellar quarter. Then, the twin growth engines fueling it all. After that, we'll see how they're innovating their e-commerce toolbox. Then we'll get into the tough questions and their answers. And finally, we'll wrap up with their vision for a one-stop shop future.
All right, let's jump right into part one, their stellar quarter. Unicommerce just dropped a report that has the whole market talking. And honestly, for good reason. The numbers are, they're seriously impressive.
So take a look at this. Revenue for the quarter hit 51.4 crore rupees. That's that 75% jump year-on-year we talked about. But now look at the other bar. That's their adjusted EBITDA. Basically, a key way to measure how profitable the core business is. And that grew even faster, at over 85%. This is the key takeaway. It's not just growth, it's profitable growth. That signals a really healthy, strong operation.
And all this momentum means they've crossed a huge milestone. For the first time ever, Unicommerce has an annualized revenue run rate of over 200 crore rupees. So, what does that actually mean? Well, it's simple. If they keep up this quarter's pace for a whole year, that's the revenue they'd hit. And to put that into perspective for you, that is nearly double where they were when they went public back in August 2024. That's incredible.
Okay, so the big question is, where is all this growth actually coming from? Well, it's not just one single thing. The company is really being powered by two very different but complementary parts of the business. Let's call them the twin growth engines. So on one side, you've got Uniware. Think of this as the stable core of the business. It's their original platform, it's scaled up, it's profitable, and frankly, it's a beast. It processes over 1.1 billion transactions a year. Then on the other side, you have Shipway. This was a more recent acquisition, and it's acting like an absolute growth rocket, just expanding at a crazy pace.
And just look at Shipway's trajectory. It is astounding. They were acquired about a year ago with a revenue run rate around 60 crores. Now, it's shot up to 90 crores. That includes a 26% jump in just the last quarter. It is crystal clear that Shipway is the high-octane fuel in their growth tank right now.
And this dual approach is really the core of their entire strategy. It's like a tale of two different game plans. You have Uniware, the established profitable engine just churning out cash flow and stability, and then you have Shipware, which is being run strategically at break-even. Now you might ask, why? Well, it's because every single rupee of profit it makes is being plowed right back in, all to capture this massive market opportunity as fast as humanly possible.
But look, this kind of growth doesn't just happen because of good sales tactics. It has to be fueled by real product innovation. So what is Unicommerce actually building to keep customers happy and pull in new ones? They're all about innovating the entire e-commerce toolbox.
On the earnings call, their CEO actually highlighted a few key new things. There's something called UniCapture. It's a video recording system that helps sellers fight back when they get unfair disputes over returns. Super useful. Then there's ShipSense AI, which, you guessed it, uses AI to automatically find the best and cheapest courier for every single shipment. And they're beefing up another tool, ConvertWay, to help sellers cut down on those really costly cash-on-delivery returns. You see the pattern? Each one solves a very specific, very annoying pain point for sellers.
And it all ladders up to this single, very clear vision from their CEO, Kapil Makhija. The ultimate goal is to be the one-stop shop, the only platform an e-commerce business really needs. Think about it. In a market that's so fragmented with all these different single-purpose tools, becoming that one integrated platform, that's the ultimate competitive advantage.
Okay, so we've seen the awesome growth, we've seen the clear strategy, but the earnings call wasn't just a big victory lap. Oh no. The analysts came prepared with some really tough, really direct questions about whether this whole model is actually sustainable.
So the first big question that came up was all about pricing. An analyst pointed out that the average amount Unicommerce earns per transaction seems to be getting weaker.
So the question is pretty simple. Do they have a pricing problem?
Now, the official term for this metric is realization per transaction. It's pretty straightforward. It's just the average fee they get for every single item they help a seller process. And yeah, if that number starts trending down, it can definitely be a red flag. So what was the company's explanation for this?
Well, the CEO basically laid out a push and pull situation. He said there are two things pushing prices down. First, they've lowered their entry-level prices to get more new brands on board. Makes sense. And second, there's the boom in quick commerce, which means lots of bulk orders that naturally have a lower fee per item. But he said they have two things pushing prices up. They're building automatic price increases into new contracts, and they're aggressively upselling their customers on new, higher-value features. So as you can see, it's a real balancing act.
All right, next tough question. What about losing customers? Let's talk about churn. See, one analyst did the math and noticed something interesting. While Unicommerce added over 100 new enterprise clients, their net gain was way smaller, which means dozens of clients must have left. So the big question is, why are these enterprise customers walking away?
The company's answer was actually pretty direct. They said, look, the churn isn't coming from our major brands jumping ship to a competitor. Instead, it's concentrated in what they call the long tail, the smaller clients. And the top three reasons are pretty telling. Either the business just shuts down completely, they decide to stop selling online altogether, or they switch to a fulfilled by Amazon type model where Amazon handles all the warehousing. In that case, Unicommerce cost software just isn't as necessary. So they basically see it as a natural part of a really volatile industry.
So with those immediate concerns out of the way, the conversation naturally shifted back to the long-term vision. And in a lot of ways, this grand vision is the real answer to all those tough questions about sustainability. So how exactly do they plan to keep this incredible momentum going? The CEO pointed to 4 powerful market trends, or tailwinds, that are basically pushing them forward. First, e-commerce in India is still way underpenetrated, which means there's just a ton of room left to grow. Second, their total addressable market is frankly massive. Third, they're consistently bringing in new clients. And fourth, they're expanding internationally. These are the huge macro forces they believe will power their growth for years to come.
And it's not just about growing organically. They are actively gearing up for more acquisitions. In fact, the company has already gotten the green light from shareholders to raise more money specifically to fuel M&A. This tells us they are on the hunt, actively looking to buy other companies with products that will help them build out that all-in-one platform even faster.
Which really brings us to the final big question. Unicommerce is making this huge bet on becoming the indispensable all-in-one platform for every e-commerce seller out there. And to pull it off, they're performing this incredible balancing act, using these steady profits from their core business to fund aggressive break-even growth in new areas. The challenge, of course, is going to be maintaining that balance. So the question remains, will their big bet pay off? Well, you can be sure that's what the entire market will be watching.